Hey, welcome to the Closing Beat, everybody. Happy Friday. How's it going today? We had a couple little days off there. Hope you had a great 4th of July and a safe 4th of July. You got all your hands, toes, fingers, and managed to get up and come to work today. So hope you enjoyed there. Well, this is our Closing Beat show that we do, just a daily show where we cover the stock markets, the good, the bad, and the ugly. Next week, no show. So if it's your first day watching, sorry. We're taking next week off. Giving everybody a break, besides our support team. So if you're one of our customers and you need help, of course, the support will be here for you. But I won't be doing a Closing Beat next week. Maybe I'll be back Friday. We'll see. But probably have a few videos to post anyways for you guys, just to, keep you guys learning. We're playing a game here called Guess the Dow. Bottom right-hand corner of your screen, you can go to that website and you can guess the Dow. No strings attached. If you guess the Dow and you're closest without going over, we'll send you $100. And today's winner is Robert. So Robert had a guess of 26916.96. He was the closest without going over. He is not a current customer of ours, so we'll be sending a $100 gift card out to him. You have until tomorrow to guess for next week. And I'll tell you right now, there's less people that are making their guesses for next week, probably because this week was a holiday week, not so many people around, but greater chances of winning the $100 next week. And so we announce that every Friday. You just go to that website, take your guess. Like I said, no strings attached. We don't play any games here. Just if you win, you win. David, who is one of our customers and regular viewer, was almost there, man. He guessed 2695725. At one point during the day, it looked like we were going to break back into positive, and he was going to be our winner. But David, you just got to try again, man. David knows who he is. Anyways, let's take a look at the markets today. You got the Dow down by 42. You got a 5-point loss on the S&P, and the NASDAQ lost 8. Not really a big deal today. The way it started was kind of negative, and all the focus was on the jobs numbers. The economy added 224,000 jobs in June. We were expecting 160, so that's better than expected. However, unemployment rate ticked higher to 3.7%. I believe it was a 3.6, got to 3.7. And the bottom line is, if you dig deep into those numbers, you just find that people who came into the workforce, who decided they wanted to go get a job, weren't able to find one. So there's more people looking for work than unable to find it. And it just shows that there's a little bit of froth still there. I guess that's probably the wrong word, but it just shows that it's still a little bit challenging. We're still near 50-year lows as far as unemployment goes. So overall, it was a great number. The markets actually sold off today because everybody wants a rate cut. Remember all those traders that say, yep, the Fed's going to cut rates in July. Well, if the economic info that we're getting is really good, i.e. the unemployment number and unemployment rate today, then why should the Fed cut rates, right? They only cut rates if things look bad. If things look good, they're not going to cut rates. And so because of that, the market sold off thinking, we're not going to get a rate cut. Holy cow. So that's basically it. One little negative on the unemployment number was wage growth. Wage growth was a lot less, meaning how much more you're getting paid to do the same job that you do. However, if you dig deep into that, if you're a manager, supervisor, someone in that type of role, you guys are the ones that didn't get paid more. Everything below that, you guys did see quite an uptick in as far as overall wage growth. I don't know. Let me know what you think. Do you relate to that number or not? So because of that, you got a little bit of a down day today. Like I said, the markets tried to recover all of it throughout the day. Very low volume day. A lot of people take today off. You guys probably do as well. Maybe there's less people viewing, not sure. So that was really the focus. And so because of that, we'll go through the different sectors and stuff here that sort of took the day off because of that unemployment number. Now, here's the S&P 500 down just a fraction of a percent, not a big deal, well off of its lows for the day, continuing the bullish sort of rally that we've had here. Usually this is a positive day, the day after the 4th of July. If it happens to fall on a Friday, this is now the second time in, almost 50 years that the S&P is finishing negative. So it's usually a positive day. There's only one other time in the last 50 years where the 5th of July, falling on a Friday, did finish negative. Otherwise, the average gain is about 0.65%. So a little bit of an odd move here for the markets. And historically, anytime the 5th of July falls on a Friday, that's also the same Friday we get a jobs number. So you can't really say, well, it's maybe the jobs number was a bit of an outlier. It always happens on the 5th of July if it falls on a Friday. So some interesting stats there for you. I think it's interesting that the Russell 2000 did well today. I love it, right? We've been sort of cheering the Russell to kind of get going, get back in an uptrend there. It started just a few days ago with this rally off lows, a good strong day for it when the markets were okay. okay, but not as strong. And so we've kind of said over the last 2 days, let the Russell take a break. We'll give it a break. It did a lot of heavy lifting here for that 3-day stretch. It has now taken a break, and again, showing relative strength here. Any of your investments, whether you're a Dave Ramsey follower or whether you have a 401k at work, an IRA with us, whatever you have, if you have small and mid-cap stocks, those are suffering just a little bit. We need those to get going to really start to outperform again. And if you're one of our customers, later today, our portfolio update is going to go out to you. I'm going to be out of town, so I pre-recorded it for you this time. Still wanted to get you that update. That'll be emailed out here just in a second. Or it's available in the dojo. If you're one of our customers, you just go into the dojo, go to the video library, and right up top, it's already there for you, the June portfolio and stock market update. And then if you're not one of our customers, these are all the classes we do just for our customers here. And we save them all. They're all archived and sort of categorized by different depending on how advanced or sort of basic they are. But if you want to go take a look and you're one of our customers, go ahead, head over there. It's available now. Otherwise, I'll be sending an email out here shortly. All right, NASDAQ was down just a little bit on the day. Again, finishing up off the lows. Great. I mean, it's sort of typical for this type of day. Very slow, very kind of calm, quiet day. Bonds were a focus today. We'll use TLT just to show you that here. It's an ETF. They sold off because rates popped, right? Good strong rally in rates. We're still inverted on the yield curve, now 32 days on the 10 versus 3s. So, still I kind of got a little warning sign economically there. But bonds with that move that they had today because of possibly no rate cut, you had REITs. We'll use ICF to track that. REITs had a little bit of a down day, still very strong. Nothing to get scared of there, I don't think. And I typed in the wrong symbol, but we'll look at home builders. XHB is the one I like to put up. Just the easy one to take a look at. It's also in the dojo here for you. They had a little bit of a down day. There you go. And, just kind of wanted to point that out. Just sort of that little extra weakness, all because of the jobs number. That was the focus. A couple other things. If you look at semiconductors today, they suffered a little bit more of a down day. Overnight, you had Samsung lower their guidance, and so that hurt some of our chip makers here in the semiconductor index. Not a horrible, not too big of a deal there. The semis have had a great move, so it's kind of like that normal breathing in and breathing out that we can all accept when it happens. If we look at healthcare, that was in the news today. Trump maybe going to use some more executive orders for drug costs. I know he wants to tackle that. He keeps mentioning it. He said today that that was going to be coming, so whether that comes over the weekend or start next week, healthcare stocks just took a little bit of a hit today on that news, the drug companies in particular. I thought it was interesting that the XLV is hinting at a golden cross here, if you're familiar with that. We've pointed out all those to our customers when they happen. The only problem is, over the last 4 times that this has happened, which is just when the 50-day crosses over the 200-day, and both of them happen to be rising, it's a mixed bag. Right? You got a 50-50 shot of success, but if it is successful, average gain is just over 1%. So it really wasn't that exciting. I'll make a big deal out of data if it's something interesting to take a look at. It just wasn't that interesting of a study. Now, market-wise for the month of July, it tends to be quite positive. We'll cover that also in our portfolio update. Like I said, going out to our customers here in just a moment. Tends to be pretty positive. Average gain is 3.36%. And in July, I'll give you guys a sneak peek. If you're not one of our customers, if you just so you have something here. Over the last 10 years, the month of July has never been negative for the NASDAQ. The last 10 years, every single July has been positive with an average gain of 4.43 or 4.44%. The S&P has actually been positive 8 out of the last 10 Julys with similar performance. So it gives you an idea. I mean, it's kind of a strong month, or you at least hope that it's going to be a strong month. As far as the S&P 500 goes, you got 79.4, let's just call it 80% of the stocks in that S&P over the 50-day moving average. Your financials are leading the way. Financials have 90% of all of those stocks over the 50-day moving average. That's a good sign, right? If you're just investing in financials or you have a big chunk of those, it's a great sign, and the financials are starting to wake up. This is an undervalued area. From a valuation standpoint, look at your trailing 12-month PE ratios. This is near the lower end of the range. So you've got people starting to figure that out, going, hey, financials are participating here. It's a good sector. It's not overpriced. And so a little bit more excitement there. Second is technology stocks. 86% of those are over the 50-day moving average. I point this out every once in a while. I'm not sure if you care there. Anyways, let's take a look. So biggest movers on the week. I'm going to try to start covering this maybe on Fridays. Your biggest mover week over week was the financials, the XLF, meaning from last week, what it did to this week, the biggest range and positive in this case. So very nice there. And then XLC you can use for communication services. This comes in second place. Biggest week over week change relative to the other sectors. This would be second in that case. You had a lot of flat areas this week, which is not totally uncommon because it's a holiday week. If you look at something like industrials, if you happen to have industrials, take a look at where it finished today and look where it started on Monday. Flat, right? A lot of back and forth there, but ultimately didn't accomplish anything. And materials also. Materials, XLB, doing the same thing, just pretty much flat overall as far as how the week finished out there. A little bit of a small gain on there, but just very, very, very flat. From a valuation standpoint, I pointed out the financials already. XLP, your consumer staples, back to 52-week highs in terms of your trailing PE ratio. So it's the most overvalued that it's been from that sort of using that data point in the last year. So one of the more pricier areas of the market. XLK and XLU, this is tech and utilities, also overvalued here just in the short term. Nothing crazy, but towards the upper end of the range. We've talked about XLU numerous times. And of course, the XLF remains undervalued. So pretty attractive here in the short term. All right. There are 35 new 52-week highs today, and I said, well, I'm going to point out a couple interesting charts in those categories if I can. AVY still remains extended in the short term, so if you like playing the momentum, those stocks making new 52-week highs, just know that this one's a little extended. I'm not telling you what to do or what the stock may do. It just stands out as a little overbought. CBRE is just sort of a sloppy breakout. You can sort of draw a line across all these highs here and see we're trading above it. So that one's kind of interesting. It's not perfect. If you're a technical trader, you could argue that one with me. I'd understand that. There you go. Torchmark, TMK, also is sort of a similar two-step little breakout here if you follow this from a technical sort of perspective there. And if you look above, you zoom out to like, a year, 2 years, whatever, clear skies above. A lot of people like to look at that. You got no new lows today. Everything stayed off 52-week lows. JWN, not JWM. There you go. Even Nordstrom was able to come off its 52-week lows. We pointed this out on Tuesday. It's one of the weaker stocks in the retail category, and it is the most shorted stock in the S&P 500 right now, meaning more people are betting on it going down, or more shares have been bet on it going down versus going up. A lot of people like to look at those for little short covering rallies, so thought I'd point that out. And H&R Block is the second most shorted stock in the S&P 500, but it's been trending higher there just a little bit, so not horrible. Lyft and Uber, we keep pointing out because of that massive reversal day that they just had here on Monday, and unable to recover from that. So I pointed this guy out right here on Monday saying that's the type of move, that's the punch in the face that you don't just get right up and walk away from. It's officially breaking through its uptrend there. So that's not a good sign. And Uber did the exact same thing on the exact same day, also struggling to recover from that. And that's to be expected. That's just the kind of things that happen there. All right, not a whole lot on my list after that. You got General Dynamics paying out a dividend here coming up. We own that one, happen to be getting paid from that one. I like it. And I think that's about it. I don't have too much more to share with you. I'll take your questions. If you happen to have questions, I'll try to answer them for you. And then remember, no closing beat next week. So there will be no closing beat next week. Probably on Friday I'll be back, but going to be out. So sorry. Enrique says, yeah, good thing we're invested in those financials. Yep, we started adding financials to our aggressive portfolios and some of the other ones in February. So we just kind of moved away from the healthcare a little bit, moved into financials with just a few other positions. So yeah, I like the sound of that too. I'm happy with that one. And Net says, oddly enough, I haven't had an opportunity to add a bit of tech, and I got in on Facebook. Around 194.80, I believe you added to your position as T as well as the other one. Very nice. Very nice. That Facebook has been, I know, kind of active there, but with that cost of 194, hopefully you can see it break above 200 soon and just get away from that mess that we've seen since the beginning of May. So nice. And you try to buy something every week. I love it. I love it. I love it. Cool. Guys talking to each other. Cool. Love it. Lance is asking about AYX. What's the question there? Lance, help me out a little bit. What are you doing with it? Do you own it? I hope you own it. That's a very, very strong stock, obviously. In the short term, it's starting to get a little ahead of itself, maybe. Not yet. But here, let me just show you on the chart. So you got a nice tight uptrend. These things can continue forever. Same on the downside. Nice tight downtrends can just bleed and bleed and bleed. But at some point, they do get ahead of themselves. And you could see the pace of this uptrend starting to pick up. If nothing else, you notice that green line, the 20-day moving average, trending nicely, nicely, nicely. And now all of a sudden, it's starting to turn a little bit vertical. In the short term, if that starts to pop off, meaning like get extended from it, I'd maybe use that as a profit, a chance to take some or all of my profit. That's up to you. Financial investor does not like Uber and Lyft. Next Snapchat, yeah, I mean, it's tough, man. You got the potential of the economy slowing down, and you've got people investing lots of money at extreme valuations on companies, well, like Uber, that have pretty much admitted they're not going to make a profit for now, for the foreseeable future, by the way. Why do you think freezing your money for 30 years is a good idea? I don't think that's a good idea. Freezing your money, I'm not sure I understand that one. Your money's not technically frozen in a Roth IRA. There are many reasons you could use it. You can always take your money out if you don't want to do it anymore or you need it for something else. So freezing is probably a bad term for that. One of the reasons you would use the Roth IRA is so it can grow tax-free. If you put some dollars in and you can take them out anytime, but the money can grow tax-free, where else are you going to get that, right? So maybe clarify a little bit. I'm happy to help on that one. This thing is jumping all over the place. With the strong job report, is the chance of a rate cut still so sure? That was the question today. Well, we got a strong jobs report, so a lot of traders are like, shoot, we're not going to get the rate cut, and took the chance to sell there. Yep. What's your take on oh, yeah, same question. Covered that one about the jobs number there. Do you think this market is already ahead of expectations and due for a pullback soon? I can't really say. It sure feels like the upside is only when we're sort of quiet or there's a little bit of good news, but any little hint of a little weakness in the economy, right back down. I mean, it's just such an easy selling pressure. I feel that a little bit with you. But other than that, no, I mean, it's kind of like steady as she goes. There's always going to be people that say, this is it, no more higher, no more higher. I like to see it a little bit first and then try to measure how that happened. And a great example is actually Uber and Lyft. If the stock market did that, what had happened on Monday, you have to look at that and go, okay, at least in the short term, the market will really struggle to recover from that. Like Uber and Lyft. They've really struggled to recover from what happened on Monday. If something like that happens, you get a little bit of a preview by having that move like you saw on Monday, and then you can go, okay, maybe in the short term it's best to hold out a little bit. Yep. You guys talking about about your Snapchat war stories there. You bought Roku. Oh, good. Roku snapped back pretty quick. It got downgraded the other day and snapped back pretty quick. So you can't complain there. You bought it at 40. Is there any resistance? Mark, you're thinking about getting more prior highs. At this point, you got prior highs. The $100 number always tends to be psychological, so it can be a little resistance. You saw it do that before. Otherwise, you're headed back to those prior highs that people will use for resistance. I don't think it just magically rockets back to those prior highs, by the way. I think you're going to see a little bit of back and forth, but you got a great stock. You've had a great run from 40. You got to start thinking about what's the goal here, right? You bought a stock, you got a great winner. What's the goal? Did you obviously, like the prior highs, 105 or so, wasn't enough to get you to sell. What's going to get you to sell the stock? And try to play offense here. Try to say, when it hits, I will react, versus having it get hit to the downside and going, oh no, where am I going to sell now? Play offense with this stock. Anytime you have a good winner, always be on the offense. Respond. If it goes to this number, I'm selling on the way up. If it goes to this number, I'm selling on the way down, and here's my number. I'm sticking to that plan, and that's what you're following. You'll feel much better about it and be able to sort of weather the day-to-day without stressing too much. Yep. Yep. Saying SPY 31. Well, you can actually look at that. I mean, you want to see what everybody's actually thinking as far as the traders thinking. You can use the options on the S&P index to kind of see what's everybody actually betting on? We can all have opinions, but what's the actual bet that people are making on? That might be a good video. Dustin Dodge just finally lands in Tampa. Welcome to Tampa. Just in time to see most of your stocks in the red and some pretty horrible weather, too. Yeah, pretty nasty out there. Is this rally really convincing? You see unusually low volumes these days. Very normal. Yeah, summertime, holiday season, holiday week. It's actually very normal to see very, very low volume. So I know it's tough to measure, right? Because you're thinking like, is this people running out of steam in this market, or is this just typical summertime? For now, I've seen nothing to say that it's anything other than just typical low summertime volumes. Summer doldrums. Is the oil and gas sector undervalued, underpriced right now? Yeah, undervalued for sure. Towards the lower end, it's one of the more undervalued sectors at the moment. Absolutely. Yep. Any thoughts on how to beat the widespread on some ETFs or other securities? Use a different ETF. There are tons of choices. If you are looking at an ETF because it's commission-free, I did a video on this to show you the true cost of you buying some of these commission-free ETFs. I have nothing against them, but if at the end of the day the spread is so bad that you're paying 6-7 cents more, that's $7 on 100 shares if you happen to buy 100 shares. Right? Or $3.50 on 50 shares. And if you're buying shares little by little, that spread adds up to more commission and more total cost than you'd pay if you just use the mainstream ETF. For example, using like the SPY versus whatever some commission-free one is. So you really, really, really want to look at the true cost of that. They're very much competitive in terms of expense ratios, but that spread can get you, man. If you're clever, you can play the game. You could try to pick off the algorithms there and see if someone will come down and grab your limit price if you're willing to put that in there. More popular with options, though. Some of these brokerage controlled ETFs, they know what's going on. They're not going to jump down and give you a better deal. Yep. Sorry if I missed some of your questions. Just let me maybe post it again. You have some Ally, you got some Bank of America, Synchrony stocks. You sell those and focus on the financial sector. Well, you are, right? I mean, you're already in the financial sector. So if you're saying, should I go look for others or look at the index as a whole? That's a decision you have to make. I can't tell you. I get in trouble if I tell you exactly what to buy or sell. But if you're looking at this and you're going, all right, I'm measuring my Ally and your whatever the other ones were, your Synchrony, Bank of America. I put these in a bucket and I'm measuring the performance compared to buying the sector, the XLF, or if you want to do regional banks or some combination of the both. Put them together and measure the two. Always measure like what you're giving up versus what you're adding. And if you find that the performance has just a little bit more of an edge over here, then the answer is simple. It doesn't matter what my opinion may be. The answer's got to be performance. You obviously want the most return you can get. You know what I'm saying? I think you get it. You could use anything for that. Whatever brokerage firm you use, you should be able to build a portfolio, then build another one and track it and see what happens. Like, which one should I be in? And you might find that being more broad-based in the sector, especially if this sort of sneaky rally continues in financials, you may like that. Yeah. I know those 5G ETFs and the theme-based ETFs are becoming and have been really, really popular. I don't disagree with 5G and what's going on there. I just think we're getting a little bit too focused. If you want to put a little sliver of what you have in things like that, I'm all about it. The problem is that it seems to be that a lot of people find a category, get really excited about it, and then overcommit. So you seem like a smart person there. You probably wouldn't overcommit to that sector. So for that reason, you can really invest in anything. I mean, as long as you're not betting the farm on it. I did a video on that where I bet the farm on a stock, and it was like really exciting for a while, and then not good. Yeah, I saw the comments about the rate cut thing. The White House is always going to want low rates. It doesn't matter who the president is. That's always going to be an argument. Could they be a little more elegant or eloquent about how they ask for it? You know what I mean? Like, every president's got their own little thing, but they all want low rates. I agree. The only person that didn't want low rates was Obama, and it's because he already had low rates, so he didn't have to ask for it. He got to just say, hey, everything's good. But that happens. Yep. Happy 4th of July to you as well. You have a question: if two ETFs have the same expense ratio but different AUMs and different prices, which is the best to buy, the cheaper one or the one with the higher AUM? If they're managed exactly the same, exactly the same, which would be rare. There'd be a slight difference in there somewhere. That's probably the reason you're seeing that. I would just go with the bigger one if I could, right? If it was and let me tell you why. It's not because I would say, well, maybe they go out of business and they don't. You wouldn't have to worry about that. The reason I would do it is for the opportunity maybe to use options. If you use options, you're always going to go with the biggest, thickest one you can find, even if it costs you a little bit more. If you don't use options, then, hey, that's a market right there. You've got to compare and look at that and go, if I'm paying the same price, should I just go with something that's maybe a little less expensive, even if it has the same performance, right? Because a lot of people will look at that and go, well, this one's 60, this one's 30, but this one moves twice as much. That means they're not invested the same. So that's a great comparison and a way to look at that. But I would say if you happen to use or think you will ever use options on those, always go with the thickest one. I hope that helps. I'm not sure if that answered it exactly, but I hope that helps you. Thoughts on the 2.57? Yeah, they are advertising like crazy. They are spending tons of money to get your attention on the 2.57%. And isn't that a coincidence, right, when old Marcus lowers the rate a little bit? They're not dummies. I don't know anything about that account. I've never looked into it. I know that they are advertising more than anything I've seen in recent history, social-wise. Yep. Not a surprise to you, Ed. Jobs number, especially in your industry. That's cool. I like when people are really in tune with their own industry and they can see, like, doesn't apply to me, doesn't apply here. You really get a feel for that. I like that. Yep. What's the difference between SPY and VOO? Yep, they're a little different. You want to look into that, how they make their decisions. There's probably a cost difference too, right? Just a touch. If I had to bet, I would say Vanguard tried to undercut the SPY. I like the SPY better, but that's just me. That's got to be you. What does happen if an ETF goes out of business? It happens. Yeah, they do. There's actually, I think, been a record number of them this year. Those are just when they can't attract the funds. It's such a competitive business, and it's such an expensive business for them to run. So they all have a plan. If we can't attract this much in assets by this date, the thing shuts down. And a lot of times they get bought out. Invesco is actually going around trying to buy a lot of these ETFs. So they kind of wait till their deadline and then they try to scoop in and buy them. So it could be a matter of just transferring to another ETF company, not the ETF. And then sometimes they'll just say, hey, we're closing up shop. Go ahead and sell up your positions. It doesn't affect the price, right? Because it's not like a company going out of business where all of a sudden there's no value. Remember, the ETF owns the positions. They're just saying, we don't want to do this work for you anymore, so you have the chance to get out, or your brokerage firm would do it for you if you don't do it by the deadline. It's not a big deal. It does happen a lot, though. Yeah. Cool. Yeah, I like some of these high-interest savings accounts. They're really competitive these days, so it's good. If your money is insured to get your money back in the case of some bank issue, the Fed would take over. Yeah, you would be alerted. There's no way. That happened a lot in 2009 and so on, where the local smaller banks were broke. That was it. They were done. And so the Fed steps in to make you whole there. Yep. They were busy during that time. Yeah, we'll see. Those high interest savings accounts are competitive, man. It's turning into a very, very competitive space, which means only you guys win. So that's good news. I have nothing bad to say about any of them that I've seen. No real catches or fine print issues there. Very cool. And good job for taking advantage of those, because a lot of people just say, I don't want to go online and actually do it. And you leave your money in a bank, you're missing out on 2.5%, let's say, So it's well worth the little effort that it takes. All right, I think I've covered it. We've wrapped it up there. I hope you had a great week. Congratulations for our guest, the Dow winner there. So we'll send, if the email hasn't gone out already, we'll send that email out to get your address, Mr. Robert. Won't say your last name. And take a shot. You got till tomorrow to take your guess on where you think the Dow will close next week. And we'll see who's right. Remember, there's not a lot of people for next week, or there's about half as there has been normally. So odds are a little bit better. You've got a better shot there. You can only guess once, by the way. If you happen to guess twice, we're going to only use your first guess. So just, that's in the rules. So careful, follow the rules. All right, have a great weekend, everybody. Enjoy, and we will see you later next week. No closing beat next week. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.